Welcome to today's video. Before beginning, please read the trade disclaimer. Please understand that this is not financial advice, just my commentary and opinion. Don't forget to press like and subscribe and click on the bell icon to be notified of the latest new videos. Hi everyone. So in this pattern, we're looking at the bullish flag, which is a pole type pattern. And what usually occurs is price pushes up from the low, creating a high, and then it will create a potential low and then a lower high here, and then we get a lower low. And then what we tend to expect is we get a fourth point after we've created a second low, a lower low, with a potential target where we will break at the point 4, which is another lower high. But at this point, this breaks up, and this technically looks like a sort of flag pattern where this is the pole, this is the flag. And what we tend to get or expect from this sort of movement is if price breaks out of the flag, it creates a pole, which is where our profit target is, similar to that of the pole which came from the below. So what we would normally do is we'll take the low of the pole and to point 2. Okay, and this is used as our target for profit. And we will take that and put that on an area from the potential breakout point, which would be 4. And we will target this as our profit target area. So something like that. And now, again, similar to other setups, what we want to do is look at potential entries and stop losses. So in this case, we're going to look at the long position. Okay, so you can have multiple areas of entry. So one can be a breakout of 0.4 with the stop loss on the low of 0.3 or at 0.3. And then obviously the target will be the top, which is the length of 1 to 2. Okay, so in this case it builds a nice 3.64 to 1 risk to reward, which is very good for entry for a trade. Okay, the other place one could look at this would be is we could take the point of 1, okay, across, and this could be where our entry occurs, and our stop loss can be at 4, and our take profit target in this case is here, and this will build a risk to reward of 2.3 to 1 roughly. Okay, now if you're taking a higher risk trade, you can, and the way one would calculate a higher risk trade would be along this line. And what we would do is we would need to work out roughly the different levels in percentages. So we can come over here, we take our fib tool, and using the fib tool we can click on the fib channel. Okay, and what we want to do initially is configure this to work out the levels. So if I click on this, reset it, or I've predefined mine to 0.25 each, so effectively 0, 0.25, 0.5, 0.75 and 1. The other thing one could do is do minus 0.25 also, or 1.25. Now we've got a channel. The reason we use the fib channel in this case rather than the normal fib retracement, because we have this at a potential angle. Okay, and then what we can do is work this out like this. So in this case, you've got the minus 0.25 at the top. So I can now add, say, minus 1.25, and this will be, sorry, wrong side, pardon me. So this will be 1.25, not minus. So we have it here. Okay. So now this is, you could use that as a template which will fit for the bullish flag and the bearish flag, and for targets. So what you can do here is if the breakout is at 0, okay, and the bounce is from 0.3, if you're going to take a more aggressive trade, in this case, one could effectively take a long position at the bounce of 3, okay, and put the stop loss ideally on the low of 1.25, around this sort of level. That's one way of measuring it, and our target can be a potential high of that flag on the breakout. The other way one could look at this is if we don't wish to use a fib channel, okay, what we can do is use the normal fib retracement tool and effectively take the high to the low, right, creating targets, and then again over here one can decide what they want to do in terms of the possible areas. So in this case this would become minus 0.25 at the bottom, okay, and then what we can do is again take an entry on the bounce of 0, which is effectively here on the bounce of 3, and our stop loss can then go to 0.25, and our target can be set to the high of 1 to 2, okay, and this obviously makes a massive risk to reward return, so 1 to 8.4, and the idea would be if you reach 0.4 effectively at the breakout zone, you could put a TP here, and then one could move their stop loss to break even and ride it out, okay. Again, this would be slightly higher risk trade, so it all comes down to how you prepare your chart, the tools you use, and how you use them. So we're not using the fib retracement tool for working out a fib, nor are we using the fib channel tool to work out a normal fib channel, but we're using this as potential areas of targets for working out a stop loss, okay. So that's it for the bullish flag video. We'll now move over to the bearish flag, which is the opposite of a bullish flag. So in this section we're going to be looking at a bearish flag pattern, in where we see price comes down from 0.1 to 0.2. 0.2 becomes a low, then price moves up and creates a lower high, so effectively it's lower than 0.1. Then price retraces down, creating a higher low, so this is higher low than 2, okay, so we're moving up. Then what we get is we get a higher high, so which is higher than the previous high, but technically it's still lower than 0.1. Then price comes down to create another lower high, okay, and then what you then get is at 0.4 effectively price tends to break down, and this will be the target of take profit equivalent from 0.1 to 0.2. So the way we would measure this is we would take the high of 0.1, take it down to roughly where 0.2 price is, so in this case here, okay, so this would be approximately our TP area, okay. We would then take this and put this down at the break point, and our target profit will be approximately that, okay. So this is your effectively bearish flag, so it's like an inverted flag, and that's the pole itself, and our target is the same length of the pole on the lower side, okay. So what we're again going to do in this sort of case is look at the various areas of stop losses and entries. So we will select the short position. So what you would ideally do is your stop loss will be just above the 0.3, just above the last high, and our TP would come down to the point which we've gathered the high to low from 1 to 2 to determine the height of take profit, and that in this case results in a 5.48 to 1, which is not a bad return, okay. Now what we also want to do is look at other possibilities. So another possibility previously, as we looked at on the bullish flag, one could enter at the the rejection on the high of 0.3, and take our entry there, and our take profit could be the same area where we have the length of the flagpole, and then our stop loss can be based on a fib level, for example. So one could take this, move that to that high, okay? So we're looking at the low at 0.2 to 3, and in this case the 25% ends up being there, so you have a nice risk to reward of 5.78. Okay, so that's another way of looking at our risk to reward as a potential target for our trade. The other way one could do this is, again, we could measure the height of the high and the low of the flag itself and target that, and this can be used done by using the fib channel. So effectively taking this points to here, okay? Now what we would want to do, because we're looking at the top side, we're looking at minus 0.25, so that's another potential area one could possibly use if we were entering here, have a stop just on the tap of 0.25, and our TP can be down. This results in a slightly high risk to reward, and obviously it's a tighter stop loss. So that's another way of looking at it. So this is it for the bearish flag. So these are some of the ways that I would potentially trade this, and the tools that I have. And again, you'll notice I have modified the fib channel levels to suit my need, and same thing with the fib retracement tool. So I hope this helps, and I will see you in the next video.